You're listening to ChartingWealth.com for Tuesday, the 18th of July, 2017. Jump right into these charts. We see the S&P 500 for the day down 0.01%. As we look at our charts, we can see that over the last 2 weeks, we have a building up move. We are still in a confirmed downtrend on our weekly chart. Started moving down for the week ending the 23rd of June. That has not changed. It does seem to be getting closer to a move up. We just recently, over the week of the 7th of July, that was really when the first time we saw a red trend, just a little bitty red sliver in the derivative oscillator. And then over the course of the past week, the 14th, it turned green and has gotten even more green with the new week that is dawning and moving. So we do have what's very important to look at as we delve into the 2-day chart. We did have a crossover, or it is in the process of occurring. We see that happening on our charts. And of course, this is the first day of the latest 2-day candle. We need to make sure that is a confirmed close. When indeed that does occur, we'll call it like we see it, and that may happen over the course of at the end of the day on Tuesday the 18th, but we do have a strong up move. We've gone ahead and started tracking a trend line. I know it's a little early to do that, but we're going to go ahead and do it just for kicks. And again, don't have a weekly vertical crossover going up yet, but we may have a 2-day soon unless the market blasts down over the course of Tuesday. That is where we are at this point. Again, waiting for that crossover to be confirmed on the 2-day, and then we'll rotate it over. Interesting to watch the market hit these highs. We'll continue to pay attention, watch as everything develops. Very interesting at this point as we see things continuing to move. Let's go to the Qs, QQQ, that's the NASDAQ 100, up 0.05% for the day. And again, just as a reminder, those of you looking at these candlesticks, when I said in that last S&P chart it was down 0.01% for the day, why do we have a green up candle? That is because we use a Heikin-Ashi candlestick. It is calculated differently from the open, high, close, low. It is calculated differently. You want to know what the Heikin-Ashi is about. It means average pace in Japanese. We have a great training at the website, chartingwealth.com. Please go there and listen to it. Back to the Qs. We see that the Qs, a much cleaner chart on a down move, actually about 4 weeks of down movement. Well, tracking down over the course of 4 weeks. We had that 1 week with some up movement on the 23rd. That's the week ending the 23rd of June. But we had a powerful down week on the 7th, week ending the 7th of July, and then a stronger up movement on the week ending the 14th, and now with this new week starting, still in a confirmed down move since that rotation over going down that weekly vertical crossover on the week ending the 16th of June, but it does appear that things are moving along, trying to move up and hit new highs. So we'll pay attention to that. Derivative oscillator still in the negative. And as we delve into that 2-day chart, what do we see? Well, it's trying to also confirm a crossover going up. We have 4 up candles, so that, of course, going on with 5 days right now, going on 6 days if it continues to move up over the course of the day on Tuesday. Pay attention. We may have a weekly vertical crossover going up by the end of the week. Don't have it yet, but we will continue to watch and pay attention. Very dangerous to be jumping into any down trades, of course, at this time, regardless of the fact that the weekly is still down. Now let's jump back into the weekly chart and move on to TLT. It was up technically for the day 0.28%. It still appears to be moving down. Derivative oscillators rotated over going down with the start of the new week. We had 2 weeks of strong down movement, the week ending the 7th and the 14th of July. We'll see how this continues to move ahead as we look at the 2-day chart. We see that we are still in a confirmed down move on both the On the 2-day chart, even though the weekly is in a confirmed up move, continue to watch. If we do see a rotation over going up, paralleling that up movement on the weekly chart, then it may very well tell us that we might want to think about jumping in on an up move. But do be cautious because we really are getting close to a crossover going down on that weekly chart. Little bit scary there if you start jumping into an up move on the 2-day, but if there's a strong, powerful up movement, we'll sure help you call that. Okay, folks, let's go to our last chart. It is gold up, bigger than anything else for the day, almost 0.5%, 0.45%. Gold is still in a confirmed down move, both the weekly chart. Let's take a look at that 2-day chart. We'll see where it is. Seems to be moving up toward a crossover going up. Hasn't happened yet, but we have going on 3 up candles. Of course, breached that 2-day trend line, not breached the weekly trend line at this point. Derivative oscillators also losing energy. What does that 4-hour chart tell us? Well, of course, we talked about that with you last week when we had that crossover going up. We had a crossover on the derivative oscillator. At the same time, we had a crossover on the price percent oscillator, always a strong signal. And of course, this 4-hour chart is typically a strong chart. Slid sideways for about a day and a half and then started popping up again on Friday the 14th and again in the morning on Monday the 17th. So please pay attention. You know, we know how prescient this 4-hour chart is in gold. And again, there's plenty of folks that follow us that practice trade just off this 4-hour chart. You can sure do it. I don't in any way discourage it. It seems to work year-round except for late December and early January. And again, nice, strong move up for the day. Folks, that's where we are as we end the charts. Remember, these are the summer doldrums. That adage, sell in May and go away, live to trade another day, is in effect. Why? Because there's not a lot of volume in the market. It's not like those strong markets that we saw during the fat time of the year, during that fall-winter trading zone. But it will be back soon enough. In the meantime, continue to practice trade, learn what you can learn, master these charts, work on figuring out how gold moves throughout the seasons. Go back in time. Again, practice trade. Same with the 20-year bond fund. Continue to watch what it's doing. Try to learn lessons. And again, you're going to do that by practice trading and by filling out your daily and your weekly market worksheets. All that stuff is available. If you want it, you have to subscribe. It's for free. Go to chartingwealth.com, sign up, print yourself out. Plenty of copies of that daily worksheet. You fill that out Tuesday, Wednesday, Thursday, and Friday. And then, of course, prepping for the next Monday is when you listen over the weekend or early Monday morning. And, of course, fill out that weekly market worksheet. It's just that easy. All that stuff is available for you for free if you subscribe to our daily market podcast. God bless. We love to hear from you. Been answering emails today, trying to give you answers to those questions you have. We appreciate that. And when you have concerns, questions, situations, let us hear from you. Also, don't forget all that good training at the website and also at our YouTube channel. Thank you so much for all the kind words. God bless. All the best from the whole team here at chartingwealth.com.